Good morning everyone and welcome back to Morning Markets on Wednesday the 25th of October. We're going to go a little bit further ashore today to Australia. We're going to cover the recent CPI print from there and how it reflects on the measures we've seen in inflation from the UK, the Eurozone and the US. So for Q3, we've just had the CPI print from Australia. Australia publishes a measure of inflation beyond just the headline CPI. It does trimmed measures and weighted measures. These reflect core inflation or price pressures. Now, the good news is that from Q2 to Q3, inflation in Australia has cooled such that we are closer towards 5% in price pressures there. However, price pressures did not fall as much as was expected, particularly by markets. And so the market reaction has been to price in expectations for another interest rate hike from the Reserve Bank of Australia at their next meeting in early November. Now, why does this matter looking across the globe and back here in the UK, Eurozone and US? Well, it demonstrates that price pressures are not just a problem for the Bank of England, the ECB in Europe or the Federal Reserve in the US. It's a global phenomenon. And it's particularly stark when we look at many of the challenges that Australia does not face. It's the world's largest producer and exporter of liquid natural gas, so it hasn't faced the price pressures from wholesale energy prices that continental Europe and the UK faced since last winter. It also has net migration on par with the UK of over 500,000 a year, but it has roughly 40% of the population of the UK. So it has a much larger migration of people available to work, so it doesn't have that shortage of workers that either the UK or the US has seen, which have put upward pressure on wages, for example, over the last 12 months. So in many ways, Australia is an outlier, but it's reflecting the same challenges that we have here in the West. That is, that because of low unemployment and a demand for workers from companies who typically may have been reducing workforces at this point in the cycle, we are still seeing price pressures come through from healthy demand because of aggregate full employment. So that's just an insight into how inflation remains a global phenomenon, and there is still much work to do from central banks, particularly in places where interest rates are more sensitive on the housing market, such as Australia. It doesn't have the same mortgage market as the US or even as in the UK, here where we can have 2, 3 or 5 year mortgages. Interest rates feed through into mortgage rates there far more quickly, yet inflation pressures remain way above target. So much work to do for the Reserve Bank in Australia, and that reflects the work still needed here from the Bank of England, the Eurozone and the US Federal Reserve. We don't expect further interest rate increases here, but it's just a reflection of the path we're going on, which is rates higher for longer. So that's all for today, but please join us tomorrow for further updates. Take care.